and I come to you on a Thursday. So happy it's Thursday, as the old saying goes. Hope you're doing well. We're going to talk about things, and one of the things I'm going to talk about is what the Bitcoin whales are doing. If you're wondering why I'm not shouting at you like a lot of other YouTube channels are, it's because I don't really see how that helps anybody. There's something nice about just speaking at a normal tone of voice, right? Anyway, what are the Bitcoin whales doing? Do you know? They're taking everything and fast. And when I say they're taking everything and fast, I mean they're literally taking all the Bitcoin. Right? There's 21 million max supply, 19.7 million have been mined. And this year so far, in the last 7.5 months, whales have accumulated more than a million, now it's well more than a million Bitcoin that were available since the beginning of the year. And they've since been amassing those Bitcoins. And we've seen that just in the last 30 days, with whales specifically as defined with individual wallets with 1,000 or more Bitcoin, have accumulated more than, I think it's an additional 20,000 or something Bitcoin just in the last 30 days. Or no, sorry, 80,000 Bitcoin. That's right. 80,000 Bitcoin in the last 30 days. So since like the middle of July or something like that until the middle of August, whales with 1,000 or more Bitcoins in a single wallet have acquired more than 80,000 Bitcoin. Not $80,000 worth, not $80 million worth, 80,000 Bitcoin. And that's just wallets with 1,000 or more Bitcoins in them. Think about that. If you had 999 Bitcoin in a wallet at the middle of July and you bought another 1,000, you're not included in that statistics. In other words, you could have 1,999 Bitcoin now, but if you started the middle of July with 999 in your single wallet, doesn't count. Doesn't count towards that score. Right? If you had 500 or 200 or whatever, you bought many Bitcoin in that last month, doesn't count towards that score. We're just talking about whales with 1,000 or more in a single wallet. And if you know anything about Bitcoin, you know that people don't keep all of their Bitcoin in a single wallet. Right? Satoshi Nakamoto, who famously has the most Bitcoin that anybody knows of, has something like 22,000 wallets with about 50 Bitcoin in each one, for the most part. Because basically, for every block he mined, he got 50 Bitcoin, and he would make a new wallet for each block he mined, and he would just keep it that way and never touch them. So he's got 1.1 million or so.
I'm a shark.
He's got 1.1 million or so Bitcoin in like 22,000 different wallets. Okay. Obviously, not most people have their setup like that. A lot of people have a lot more than 50 Bitcoins in a single wallet, especially whales. But usually, if they have 1,000 or more, they're going to keep them in different wallets. Okay. So if you have 1,000 in a single wallet, it means you probably have thousands of them at the very least, if not tens of thousands. And for whatever reason, you keep copious quantities in a single wallet. Why do I say copious quantities? Well, when Bitcoin was $1 a piece, maybe 1,000 in one wallet wasn't so big of a deal. But if you have, the prices around the $60,000 mark at the moment, and you keep 1,000 of those in there, right? That's like $60 million in a wallet or something. Right? That's a lot of money to keep in a single wallet. Wealthy people don't tend to keep tens of millions of dollars in a single bank account. Therefore, they probably aren't likely to keep that much in a single wallet. Obviously, some do, because there are significantly enough wallets that it is a measurable statistic that we can see 200, we can see 80,000 Bitcoin in the last 30 days have been accumulated by such wallets. So it's not like there's only, a tiny handful of those kind of wallets. There's a whole bunch of them. So what does that mean? Right. Well, if the wallets that are making these massive accumulations have 1,000 or more in a single wallet, what do you think are the odds that there are people with 300 in a wallet that haven't accumulated any, or 500, or 700, or a dozen? People are accumulating this stuff at a rate that is unheard of at this point. Now, you could say, well, in the early days of Bitcoin, when it was 50 Bitcoins a block and people were mining it effectively for free, right? The price of electricity was more than the cost of the actual Bitcoin, if you remember those good old days, 2009, 2010, even 2011. Um, Back then, the mining was different. You got 50 coins per block, and you would mine them and leave them in your wallet. But now we're talking about an asset that costs tens of thousands of dollars per coin. And that means that the only people buying them in their entirety are people with significant quantities of cash, especially when they're buying dozens or hundreds or thousands at a time, right? We're not talking about the average retail investor at this point who's buying a whole Bitcoin. We're talking about rich people. We're talking about wealthy people. We're talking about ultra wealthy people who are buying as much as they can to fit into their investment portfolio according to their strategy on how much they believe they should be all in on Bitcoin. Obviously, they're also buying other cryptos. It's not like they're only buying Bitcoin. But obviously, that's the main crypto they're buying because that's the one that has the biggest appeal for a lot of reasons. It's the one that's considered a relatively safe risk, low risk, safe investment asset because of all the trials and tribulations it's gone through, the fact that it has ETFs, the fact that it's, the ETFs are obviously regulated in U.S. markets by the SEC, and a government regulated asset like a ETF makes Bitcoin a much more interesting investment for people who have a lot of money. Obviously, there's Ethereum, which has a lot of regulatory standing as well because it also has an ETF, has a bunch of ETFs like Bitcoin. And I'm talking about in the US, right? And I know Solana has an ETF that's been approved in Brazil. It's the first in the world, blah, blah, blah. It's lovely, wonderful. But it doesn't have regulatory approval in the US. It does not have an ETF in the US. And the US market is still the main number one economic market in the world, right? Why is that? Well, it's because the US market is still the main economic market in terms of the global financial superpower because the US dollar is still the world reserve currency. Can that change? Yes, that can change. Will it change? At some point, it's likely to change. When is it likely to change? It's likely to change when it's likely to change. Right? It's likely to change whenever it happens. It's probably going to be a slow process. It might take years, it might take decades, right? People always say, well, what is it that backs up the US fiat currency? Obviously, it's the armed forces of the United States. The fact that the US is the nuclear superpower. There are obviously the Russians have a lot of nukes as well, but the US has a relatively more formidable arsenal, even if they're relatively on par. But the rest of the US armed forces makes the US the military superpower of the world, and it has the ability, because of the petrodollar, which is degrading in some sense, but it's still a thing People still do most oil purchases using dollars because of all those things combined. Plus, you have the global reach of, the financial system of the United States, and you have the armed alliances like NATO and other things like that. Right? It makes the U.S. the global superpower, the global police force, whatever you want to call it, even if you don't like it. And that means that the U.S. economy is still the strongest. So the fiat currency of the U.S. is still the strongest, and a lot of countries owe debt to the U.S. Right? They hold a lot of treasury bills. They hold a lot of dollars. They owe a lot of debt. A lot of U.S. They own a lot of U.S. debt, or they hold a lot of U.S. debt. What does that mean? Well, that means that the U.S. can call in its chips at some point. Can the U.S. fix all of its debt problems just by calling in its chips from around the world? No, not necessarily, right? But can it resolve debt problems with a number of countries by doing so? In theory, yes, it could. What is a more likely way for debts to be solved between nations? It's called debt forgiveness, right? You're going to have a whole bunch of nations at some point to say, listen, these debts are more than 50 years old or 70 years old or 100 years old. We're just going to wipe them off the books and just start fresh with, cleaner books, easier to manage books, less debt going all around. In some sense, debt helps nations because if they can hold other nations, debt against other nations, then they can still float their currencies and their economies. On the other hand, it gets to a point where if countries are in so much debt that they can't afford anything, they can't afford to invest in anything new, they can't build new roads, they can't build new bridges. A lot of times, what they'll do is they'll literally wipe their debts with or without agreements from other countries and start anew. And sometimes if they do it without other countries' agreements, that can hurt their economy to some degree, especially in the short term, but longer term, it can be okay. If they do it with the agreement of other countries, it can help them in the short term and actually hurt them longer term because of other problems that causes. So there's always pros and cons. But what is important to keep in mind is that there is a new financial asset class called cryptocurrencies. It doesn't matter if you like it or not. It doesn't matter if you think it's investable or not. It doesn't matter if you think it's worthy of putting a penny into or not. Right? You need to know, especially if you don't know already, that not only does this financial class have significant liquidity, like more than $1 trillion, which isn't huge at all, but it's significant. Bitcoin is already the ninth most liquid asset in the world at more than $1 trillion. So that makes that asset class a speculative target for speculators, for investors, for whales, for banks, for governments, for financial institutions. They want to own as much as possible because they see that that's the future of finance. Right? The best and the brightest are, in fact, going into crypto, just like they're also going into AI and biotech and health tech and all these other things. There are plenty of incredibly bright people in the crypto space. They want to be in it. Why? Well, it's the future of financial transactions. It's the future of value transactions, which is even more important than financial transactions. It's the future of transactions. Recording things on blockchains is going to be increasingly important over time, despite the fact that most of them are very slow and cumbersome and bulky at this point, and they're kind of annoying in a lot of ways, and they're kind of slow in a lot of ways, and they're kind of, not efficient in many ways, but they are very effective and they are growing in popularity. And that's not going to change anytime soon. We're not going to see suddenly Bitcoin and crypto become incredibly less popular for no reason. Could it happen? Could people lose interest in it? Sure, people could lose interest in it. Are they likely to lose interest in it suddenly for no particular reason? No. If you look at models of distribution, if you look at adoption rates, if you look at network hash rates, if you look at all the different metrics that we can use to calculate how fast Bitcoin and crypto and other all these altcoins are being adopted, the rate of adoption is increasing. It's not decreasing. we're seeing more and more people sign up and create wallets every single day at a rate that's faster than cellular communications, cell phones, mobile devices happened back when they started happening in the 90s, okay, and the early 2000s, and the first decade of the 2000s. So we're about where we are in terms of crypto development, right? We're like 15 years into Bitcoin, a little bit more than 15 years now, and we're seeing already 500 million crypto wallets and about 250 million Bitcoin wallets. And you could say to yourself, well, but 500 million is not a lot. That's only, there's 8 billion people, 8.2 billion people on the planet. So 500 million is like less than 1/16 of the population. Correct. It's slightly less than 1/16 of the population. But what does that tell you? That tells you that there's still another 15/16 of the population left to go. But we're getting there relatively quickly, right? The internet existed, and everybody says, the internet grew from 0 to billions overnight in terms of users, but it didn't really, right? It took decades for the internet to grow to billions of users, right? In fact, the internet was created in the early 1960s in terms of the technology, the TCP/IP technology. And it wasn't until the late 80s, really, that it became even modestly popular across beyond, reaching beyond universities. And you had commercial services like AOL and others offering internet services to the masses. It was, you know, far from being an overnight success. It took decades for people to actually reach the level of billions of humans online, right? Decades. Now, did it grow incredibly fast? Yes. Did it grow faster than the rate of adoption of television? Yes. Did it grow faster than the rate of radio? Yes. And newspaper before that? Yes. Et cetera, et cetera. Right? Every new mode of communications and every new mode of transacting tends to grow faster than the previous great revolution of information. And crypto is really an information technology revolution. It just so happens that it's information technology that is bound up with the ability to transact finances and values greater than any other previous system where there wasn't a native system for transacting financial values, right? The internet by web, internet version 1, internet version 2 with the web, didn't have native cryptocurrency applications that you could just transact finances securely, safely, mobile, remotely, etc. Right? It didn't have any way to do that. Were there systems invented that work on the internet? Sure. PayPal, Zelle, all these Payoneer, all these things work online as ways to transfer money between people where you don't necessarily require a bank. You just have to have an email address. So that's internet native in the sense of the system works natively to the internet, but the system itself isn't native in and of itself as an internet native product. It wasn't, Payoneer and PayPal and all these systems wise, they weren't created in the internet protocol. They were added to it. There's second layers, third layers, right? And they can connect to your bank, which is another layer. Traditional banking systems also connected to the internet after the internet was created, right? And banking wasn't natively created into the internet protocols, but technology engineers figured out ways to connect these devices, with software to let people transact finance securely, relatively. But it's centralized, which means you don't really own the money. It might be yours, but it's not really yours if someone else holds it. Just like with crypto, if you don't hold your keys, it's not your coin. It's not your crypto, right? It's only yours if you self custody. So you are your own bank. There is no other bank that you can call. If you have crypto in a wallet and you lose it, and you don't have your seed phrase, you don't have your password, it's gone. You don't have access to it. You might be able to see the wallet, you might be able to look at the wallet, but if you can't get into it, you've lost access. It's effectively not yours. And good luck trying to hack into it, figuring out the password. There are companies that can help you do that, but you need to know some things about, the password or the seed phrase or whatever in order to make the probability greater so that you can actually access the seed phrase again. Basically, what they're doing is they're guessing the password, based on information you have, and then they can allow you to get back into it. Why do I say all this to you? I say this to you because it's a new form of transacting finances and values, relatively, for most people. They still don't understand it. Right? 15 out of 16 people still don't have a crypto account. They don't have a crypto wallet anywhere. 15 out of 16 people. That means it's still very new. That means it still has a lot of room to grow. Why does it mean that? Well, because the probabilities are that it's not going to just stay 15 out of 16 people don't have a wallet. Soon it'll be 14 out of 16 people don't have a wallet. And then 13 out of 16 people don't have a wallet. Eventually it'll be 10 people out of 16 don't have a wallet. Soon then after that it'll be 8 people out of 16, which means by then half the people will have a wallet. And what happens when half the people have a wallet? And right now there's only 1 out of 16 that have a wallet. What do you think's going to happen when half the people on Earth have a wallet, or more than one, a digital crypto wallet? It's going to make a significant difference in the way people transact. It's going to make a huge difference in the way people transfer values, right? It's not like a little change, like a new social media application or, a new application on your phone that lets you, I don't know, record a video of whatever you're cooking and then turn it into a written recipe that you can easily share among your friends. It's not something like that. It's not a way to record a sporting event and then share your comments about the statistics with the world. No. It's a way to transact values. So it's all of those things that I just said and a whole lot more. What does it mean to transact values? It means you can transfer between people directly with no middleman more than just money, more than just regular data. Values. Values are measurable in many cases, and values are tangible in many cases. In some cases, they're not so much, and yet blockchains will allow people to create ways to transfer those values as well. What does that mean? Well, that means that in time, the transfer of values will be much more than just about transferring financial information and numbers back and forth between people. And that's one of the reasons that whales are accumulating as much as they can. Because it's not just about the money. These whales are already rich. They're already wealthy. They're set. It doesn't matter. They could never touch crypto and still do fine for the rest of their life, right? They're not worried about paying for their bread tomorrow. They're not worried about paying for their living expenses for themselves or their family, or their educational costs, or their insurance, or their cars, or their travel, or their vacations. Not worried about any of that. They're already wealthy. That's why they're accumulating now. They're making it very obvious. They're taking as much as they can off of the market through OTC and through direct purchases from miners and from buys from other people on exchanges and through trading on exchanges, because a significant number of them know how to trade pretty well. That's how they got to be whales in many cases. And that's why they're accumulating as much as they can, because they know what happens. They know what's coming. Right? They're not ignorantly ignoring the changes happening in the real world around them. They know exactly what these changes mean for the world and for humanity. So, anyway, just wanted to talk to you about that, and keep that in mind. Don't let them take your Bitcoin. I know I've ranted against government control of Bitcoin and whale control of Bitcoin, and I still do. I still think they've basically ruined the entire purpose of it. Right, the greater purpose, the primary purpose of Bitcoin, was to be the people's money in the sense of it would be an electronic peer-to-peer, electronic cash peer-to-peer payment system network and currency. It is no longer the people's money. Right? It's the money of the wealthy. They've completely taken it over. They own more than 70% of it. Right? Probably more at this point because they keep accumulating as much as they can, and they're leaving a tiny percentage for the rest of the entire world. I will honestly be surprised if in 10 years there's more than 1 million Bitcoin in the hands of anybody that has less than a whole Bitcoin. I'm serious. Think about that. It means out of 21 million Bitcoin that there'll ever be, 10 years from now, when there's 20 million of them are mined, you will never see again more than 1 million of them in the hands of regular people. And that means the entire planet is going to use 1 million Bitcoin. Which is another reason I don't believe that it's ever going to be the only global currency. Because yes, I know they're divisible. Yes, I know there's 100 million of them per Bitcoin, 100 million Satoshis per Bitcoin. And I understand that 100 million times a million is a lot of Satoshis. But still, the average person who has aspirations of, accumulating more wealth is not exactly going to be enamored by the thought that the entire world population is basically going to be limited to 1 million Bitcoin, and the other 20 million of them, or 19 million, or 19 to 20 million of them, are going to be in the hands of people who have massive fortunes compared to them, right? They're going to want to use other cryptocurrencies, which is why other cryptocurrencies are always going to matter. They're always going to be a thing. It's never going to be just a one coin world. And to think that, to be a quote unquote Bitcoin maxi to that degree, and to think that no other altcoin is ever going to have any value 10, 15, 20 years, 100 years from now, frankly, it's insane, okay? Now, I get why people do it. Usually it's people who have significant stacks of Bitcoin who are anti-altcoins. And if you think about it, it's really dumb and counterproductive. Why? Well, because the price of Bitcoin, if you care about the price of Bitcoin going up, as a whale, for example, the price of Bitcoin went up dramatically with the advent of altcoins. It didn't go up to the moon before there were altcoins, ever. It had nice growth, but it didn't go from 0 to 1 million. It didn't go from 0 to 1,000 before there were tons of altcoins. No, it took the birth of many altcoins to be created in order to do that. So, in other words, competition is good, right? Competition breeds demand. Competition is a product of demand, but also competition breeds demand. When you create competition, you create demand. And we've seen that in the world of crypto already, and we're going to continue seeing that in the world of crypto, just as we do in every other field. The more competitors there are in a field, the more demand there is. Why? Well, because usually, first of all, demand creates competition, but competition also creates demand. It's a self-fulfilling revolving door prophecy, right? If you have a lot of competition, people are going to be interested and try different things. Will there be winners and losers? Yes. Will there be consolidation? Of course. Does that mean that everything will consolidate into one? No. No, it doesn't. La Lune.
Luna.
The moon. The moon. Can we see the moon from here? Can we see the moon?
Yeah, it's black.
Can you see? Oh, it's blocked behind the tree.
Did you find out top?
So anyway, we now are in a stage where the demand for crypto is so high that the big wallets are doing everything they possibly can to take everything that they can. And they're going to. They're going to take everything they possibly can. They're not going to leave you anything to have. I'm not saying this to sound all depressed. I'm not saying this to get you down. I'm saying this to make you aware. There is a ticking clock. It is ticking. Time is moving fast. Every day you ignore it, if this is something you're interested in, every single day you ignore it, it's becoming less and less possible to buy any.
Dad, look, see that?
Every day you ignore it, they are accumulating more and you are getting less. And what does that mean? That means that time is running out for your ability to accumulate as much as you ever think you'll need before it's all gone. I'm talking about Bitcoin specifically, but other coins as well. Ethereum is next in line. It doesn't matter if you like Ethereum or not. I personally don't like it so much for a lot of reasons, but do I have some? Maybe. I don't ever tell people what I have or don't have, but do I have any amount of cryptos? Yeah, probably. Um, do I think that it's wise to diversify at least a little bit and hold different forms of cryptos in a wallet? I think if you're going to be investing in anything like a new asset class, that it makes sense to hold at least some variety of coins. Because yes, Bitcoin might be the gorilla forever, but it doesn't mean others aren't going to be worthy as well, and aren't going to be valuable, and aren't going to be things that are desirable. And when you consider that the amount of the whales that are buying the cryptos available far exceeds the amount of, for example, Bitcoin available, right? Like, there's clearly not, by definition, there's not enough Bitcoin for one Bitcoin per millionaire. And now, since 70% of them are owned by governments and banks and whales, and financial institutions, it's far, far less. Like, if there's 60 million millionaires on Earth, there's not going to be, and the average millionaire will be lucky to have a quarter of a Bitcoin. Seriously, they'll be lucky, right? And if they all rushed in now to try to buy it, it would make it very hard because the price, in theory, would go through the roof if they all went through exchanges to get it. But of course, if they're millionaires, they'll probably go through OTC or other, sources, directly to miners, etc. But if they don't have connections, it's going to make it harder. So inevitably, if you have tens of millions of millionaires all of a sudden trying to buy Bitcoin, it would drive the price through the roof. And they wouldn't be able to acquire an entire one on average. They'd be buying like 0.1 Bitcoin, 0.2 Bitcoin, 0.3 if they're lucky, right? Like really, if they're lucky. Maybe they had a connection with some of the whales who were willing to sell them the whole coin. But the people who are accumulating en masse, they're aware of these statistics. They know exactly what's available. They know exactly what's not available. They know exactly how long it's going to take until none of it's available. I can tell you because, well, if I know, and if you know, hopefully, they certainly do, right? They have accountants. They have spreadsheets. They can look at the numbers just like we can. They can project when all this stuff will be not available. They know by when the rest of the remaining couple million Bitcoins that aren't yet in the hands of whales will be. They also know the points at which people are willing to sell somewhere along the line, whether it's $100,000, $500,000, $1 million, $5 million. They know. Why do they know? Because we're not in the beginning of humanity here. We understand how people are in many ways. We can project things like financial estimates very accurately, right? This is a well-known science. And yes, it is a science, right? Is there some art to it? Not so much. Maybe a tiny bit, but not so much. The art of it is like psyching people out, right? Mind games, making people, double think or doubt themselves. But the bottom line is people want desirable assets. And people who have a lot of assets already, people who have all the money already, they don't want you to have any. They're perfectly happy for them being rich forever and you not having anything, and you being effectively a financial slave forever. And while Bitcoin and crypto were supposed to give people an exit from that, guess what? That was never going to happen given the existing systems of crypto. It was always designed to help the people who already have a lot accumulate more than the people who don't. Like it or not. And I'm a person who likes crypto, but that is one of its greatest failings is it was designed specifically not to change the system enough that it would actually help the people who are the have-nots accumulate more or as much as the people who are the haves, which is one of the reasons I'm working on yet another crypto project where that's exactly the idea. And I know people can say it'll never work, blah, blah, blah. They'll give me all the reasons in the world why it's not going to work. They're going to tell me why it's going to be a bad thing. It's not going to work. It's going to, socialism, it's not capitalism, and all this other nonsense to tell me, despite the fact that the world markets that we live in are not capitalist. They're completely regulated, which makes them socialist in many ways, even if they're capitalist to some degree, right? They're not pure capitalism, that's for sure. They're, fully. Okay, maybe there's reasons. Maybe there's good reasons to have regulations, right? There are, in fact, some good reasons to have regulations, arguably, but that doesn't mean that they're purely capitalist. Purely capitalist markets don't have regulations. They're laissez-faire. They're designed to let buyers and sellers conduct business without interference. But that's not the world we live in. So there is room and space and probably demand for a crypto project that will actually be better distributed, will actually allow people who don't have anything to accumulate a lot of it without having to be burdened by insane costs. At the same time, it will allow people who already have a lot to get a fair share, but not so much that they have an exorbitantly bigger amount than other people, at least during the initial, you know, decades of its existence, so that everybody alive on Earth has an opportunity to get their fair share and then enter a market in which actually people have more equity, people have more of the tools that they need to succeed, right? Because money is a tool, money is a medium, money is like water, liquid capital, right? But if you don't have access to any of it, you don't have any of that. You got nothing, and you're stuck, and there's nothing you can do, and it's very painful, and it costs people a tremendous amount of quality of life. Sometimes it costs them their life. So, as I say, the whales, the banks, the governments are doing everything they can to get this much, to get as much as they can out of your hands. And I've been saying since like early in the year after the all-time high, I said, watch, they're going to shake the market out now. They're going to drive it up and down between 70 and 50K and maybe even lower. And they've done exactly that. I kept saying, whatever you want to call chop, it's just buy pressure and sell pressure. And the sharks and the whales know exactly how to drive the prices the way they want, especially when they have big enough bags, right? And they're going to do that. People trading with lagging information are going to get wrecked repeatedly, and they're going to lose all their capital, and they're going to get the crypto shaken out of their hands. Why? Because the ones who already have most of it are greedy as hell, and they want all of it. That's why. It's not because they have some noblesse oblige view of the world. It's not because they have some spirited ambition. It's because they're greedy and they don't want you to have any. And that's the bottom line. So keep that in mind and don't get left out. I'm not telling you to invest. I'm not telling you not to do anything. I'm just saying these are the facts. Do with this information what you want. But don't tell me if you watch this video that you didn't know in August of 2024 that the whales are trying to get every bit of Bitcoin and every bit of Ethereum and every bit of hundreds of other assets that they can get their hands on, specifically so that you don't get to have any, or so that whatever amount you have pales in comparison to what they can stack now when things are relatively cheap. And yes, they are relatively cheap. And yes, I know we're near all-time highs. It doesn't mean that they're expensive relative to where they'll be 10, 20, 30, 50 years from now, 100 years from now, when these people's second and third and fourth generations after them will be living on the accumulations that the current generation are making. Don't make that mistake if this is something you care about. At least learn about it. I don't care if you invest, it's your choice. I mean, I do care, but I care in the sense of I want whatever's best for you. And I mean that, whatever's best for you. Maybe you should never touch crypto, right? Maybe you shouldn't. I don't know. But it's an asset class that has a huge amount of demand from people who already own all the money. What does that tell you? Does that seem like something you should ignore? Does that seem like a thing you can just pretend doesn't matter? All the wealthiest people that know about this stuff and have learned about it are buying as much as they possibly can. Does it? The biggest banks in the world are accumulating as much as they can. Do they go around and invest in just anything that people create? Do they, are all of the banks buying the same asset class of some random new toy that was invented? No. Are they buying as much of the future money as possible? Yeah. Why? Well, if you knew what the future of money was, wouldn't you want to own as much of it as possible too? Maybe you don't, but I know that the wealthiest people and organizations on the planet do. And I don't think they have good intentions. So I think that it behooves you to know about this stuff so that at least you can be informed about what's happening in the world and not tell me or anybody else that you didn't know when you had the chance to get Bitcoin still for less than 100 grand. And sure, you probably can't buy a whole Bitcoin like most people. Maybe you can. God bless you. Most people can't buy a whole Bitcoin at this point. But you can buy stacks of sats. You can buy, you know, about 1,500 Satoshis for $1 right now. Might not seem like much, but 10 years from now, that 1,500 Satoshis might carry you through a day or a week of living, right? Might carry you through long, who knows, right? 20 years from now, if you've accumulated, millions of Satoshis, right? You might be set for life. I know it sounds crazy, but think about it. If Bitcoin ever hit like $100 million and you accumulate a million Satoshis, which is 1% of one Bitcoin, that means that you have $1 million worth of Bitcoin. Of course, by then the dollar won't be nearly as worth as much as what it is today. Probably be worth, half as much or a quarter as much as it is today because it keeps getting cut in half every 7 years or so. But if you have 250 grand worth of today's money 20 years from now, about $1 million then in Bitcoin, just because you happen to own 1% of one Bitcoin, that might keep you very well financially stable. You might not be rich from it, but you might be stable. And if you manage to accumulate 0.1 Bitcoin over the course of the next year or two, that might make you a future millionaire. If you acquire 0.2 Bitcoin, that might make you a multimillionaire. In today's money, if you manage to get a half a Bitcoin somehow, right? If you don't have access to that money now, but you stack capital, you stack sats, and every week you buy $50, $100, whatever you can afford, of money that you can literally burn and not sleep and not worry, not lose any sleep over, whatever your financial situation is, right? You might be incredibly wealthy relative to the average person. Of course, not compared to the people who own hundreds of thousands of them, of Bitcoins, whole Bitcoins, right? They're gonna be trillionaires if Bitcoin ever goes to $100 million or even $10 million, right? They'll literally be trillionaires. People wonder where the first trillionaires are going to come from. It's probably going to be from something in crypto or crypto related. It might be some software app. It might be some amazing internet application, invention, whatever. It might be some health tech thing, some AI thing, some who knows what thing. The money of it will probably be somehow tied to Bitcoin and crypto. Almost guaranteed. Not necessarily, but almost guaranteed. That's the one kind of the known about that situation that we can probably count on is that people, whoever will be the first trillionaire, will very likely have a bunch of crypto. I'm sure they'll have other assets because, of course, but they'll very likely have some amount of crypto and a not negligible amount. So keep that in mind. And it doesn't mean you have to dream of being a trillionaire or whatever because it's frankly absurd. I'm sure it'll happen, but it's absurd in my opinion. And if you want to be, go ahead, man. Go for it. Hopefully you're the one. If that's your dream and you're a good person, right? I wish you well in that pursuit. But to the average person who just seeks financial security and independence and, wants to not be ridden by debt their whole life and depending on others to pay them, now is a time like no other. And it's been like this for 15 years and it's getting increasingly so. And the data and the evidence are suggesting very clearly, they're indicating very clearly where the future of all this is going in the long term. Does it mean I can't be wrong? No, of course not. I could be wrong. What if it goes to zero tomorrow because people don't want to use the network anymore? They wake up tomorrow morning and they decide, you know what? Let's go back to paper money. Forget crypto. Nobody wants to do electronic payments anymore. We just want to pay for things in paper. We're done paying online. No credit cards, no debt, nothing. It's a possibility. It's an incredibly unlikely possibility. It's an incredibly improbable possibility because people have grown significantly dependent on electronic forms of payment over the past 50, 60 years since the advent of credit cards, etc. So to think that it's just going to go away, in my opinion, is naive and unrealistic. So for what it's worth, I'm not ignoring this asset class. You do what you want, but I'm not ignoring this asset class. I think it behooves me and anybody else who wants to be part of the top 1% in the future, if you're not already, and you want to attain that, crypto is a very obvious way forward to doing that. And for all the people who say it's a scam and it's a this and it's a that, really? Like, we're well beyond that. Okay? Crypto is not all a scam. Bitcoin is not a scam. Okay? Are there scam projects within it? Sure. Are there scam projects in the fiat world? Yes. Far more of them, in fact. Not only because of time, but because of the sheer quantity. People are conditioned to fiat currency, therefore it's easier to scam them with it because they have it. It's easier to get it from them. Crypto is relatively new. Most people don't even have it. So it's harder to scam people, technically, because there are less people who use it. But it's just as easy because it's a new thing. So it's very easy to fool people. Click this link, and then they click a link and they get their wallet drained. But to say crypto is a scam in general at this point, I mean, you're either naive or you're malicious when you say that. Naive, I can accept. You don't know any better. But malicious, that's not okay. And I see malicious whales and banks and governments and all these people with huge wallets maliciously misinforming the average public, saying, oh, it's a scam, stay away from it, don't buy it, because they want to keep acquiring more while you don't. They want to have it all while you don't. And then one day when the whole world wakes up and realizes, wow, half the planet has an account in crypto and I don't, if you're in the half that does, you're at least in a position to have some meager scraps that are available. If you don't even have a wallet yet, you going to have to get on board real fast, and it might not be so easy by then to accumulate any significant amount. And that's why these whales want it now while it's relatively cheap. Anyway, I've gone on about this a lot. I hope you got something out of this. If you did, like, subscribe, share, whatever. But more importantly, learn. Learn about this. Tell me what you think in the comments. Tell me if you think I'm crazy, that I think about crypto so much, that I think it's the future of finance and transactions and values, or tell me if you agree that it's actually that and possibly more. Whatever you think, share it. I want to know. Until next time, happy.